Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Tuesday, January the 31st. And we had a nice trend today. We actually had a double top uh, up here. It sold off, and then we had a nice downtrend. And if you drew your trend line off these first couple of swings, it uh, should have been pretty evident. And you actually had, this is a couple of measured legs down here, but this is really your first leg and then a two-legged correction and then your next leg. And I don't think they're quite a measured move, but they're close enough to call it a two-legged measured move. You see there's move one, and then there's move two, and it's real close. You can see it went into this trading range right here. We broke a little lower, failed, and then the trend reversed. We had a break of this trend line right here, retest to a new high. It tried to sell off, but it couldn't, and it just pretty much went into a trading range for the rest of the day. And what we did today, as you can see, we broke a little higher in the overnight from yesterday afternoon, but all we did was come back and test this 1300 area once again, and we may test that thing several times before it's over. And it may not hold, and we may go lower from here. So you just got to remember, this thing is like a magnet. 1300, it's a strong psychological area, and it's like a magnet. So prices are going to be testing it from both sides. If we get below it, it's going to act as a magnet pulling it back to it, and when you get above it, it's going to act as a magnet pulling it down to it. And at some point it'll hold and prices will move on higher, or it'll break through and act as resistance and hold, and prices will go lower. But it may take a long time, so we might hover around in here for a while, like we kind of have all these levels all the way up to this area. So just keep that in mind. But hopefully you caught this trend line. This was a really nice sell-off, and all this is a two-legged correction between two bigger legs. Leg one is this, your two-legged correction right here, and then leg two. And this was a strong clue that the trend was ending right in here, and this was probably good enough to be called a break right here. It really depends, because you might have drawn this right here like that. And if you did, it was still okay. You still should have got the same results. But when you got these closes down through here, I pulled mine down to touch those, and when it did, it set this trade up perfectly off this double top right here. But even if you didn't have your trend line right here, you still had your double top. And you know, even if you like drew it out here, which is okay, and it's obvious that some people saw that, because you see how prices reacted right there. They hesitated, but they still broke higher. But that was because we had this failed break out this side of the trading range down here, and then prices went higher, broke this little trend line. This was just a little short-term trend line. We had a pretty good sell-off, and a lot of people might have been looking to get short here, but all we did was have a trap, created another double bottom right here with this little trap. But remember, anytime you get a trend line break, you're probably going to get a retest. And we did. We went back and had a retest, and then we went into this trading range. And really from this point, this was, you probably could have, you might have taken this long here, and if you did, you probably were okay. But once it pulled back and got choppy right in here, that was pretty much it for the day. There was a breakout here above this double top that was shortable, so that was okay. And by that time it was too late in the day really to do anything else. I'm not even going to talk about that out there. But regardless of how you drew this trend line, this, you know, you don't have to get these exact. If you get in the right area, to be honest, that's probably the trend line right there, and this is your break. And then you got a few legs down to a new low. We went into this trading range. There's another break, a couple legs down to a new low, and then prices reverse. So that is probably your accurate trend line. And I actually had mine drawn like this right here, which got me close. And but even if you'd have come out here and drawn it right off the high, you still, those first couple of swings, you're still in the right area. You still should have got the same result. So just shows you don't have to get your trend line exactly right, but I believe that is the correct trend line right there. And sometimes you draw it off the closes. Most of the time it's going to be off the stems. And but sometimes it's off the closes, and you just never know. So you just kind of have to play around with your trend lines and keep testing. I actually hate to say that because a lot of times what people will do is then they start drawing trend lines and they're checking them every 2 seconds and they can't even watch the price action because they're checking your trend lines. But just, it doesn't hurt to go back every once in a while and just move your trend line around a little bit to see if you got it right. And I'm pretty confident that was the correct trend line right there. And you can see that caught that. It caught this. We broke above here. Then we came back down, retest new low. That's actually 2 legs down, and then it reversed. And not only is this a new low, but it just kind of tested that line again from the upside and held. As you can see, it tried to test it from the upside here, but failed and then went lower. And so I believe that's your correct trend line right there. And it looks pretty good, and it would have set up for any of these trades down through here. This trade was okay. I didn't mark it because it wasn't a great trade because it didn't get back to the EMA. It didn't quite get back to what I had drawn as a trend line. And I just didn't like it that much because it didn't break above this bullish bar before reversing. But if you took that trade, it was a second entry short. There wasn't much room to scalp out before getting across this low support here. And that's really all this was a bounce off this support area right across here. And a lot of times I buy those blindly, and if you had them, you would have had enough room to scalp out. But if you didn't scalp out and get out, you got burned because this thing went much lower. And so that's the danger of that in a nice trend like this. But what happened, what I'm guessing happened, not only did we have the support here, but we had leg down, first leg down, correction, second leg down. And if you measure those, they're probably going to be very close, if not exact. There's leg one. There's leg two. And this one's a little bigger, so this was kind of an overshoot here. Because if you drug this down here, you can see that's an overshoot. And usually after an overshoot, you're going to get a reversal. So my guess is you got a lot of trapped longs right here thinking that this trend was over and that this support area was going to hold and we were going to go higher again. And that's why you had such a ugly sell-off right quick that suddenly shot lower there because it trapped a lot of people. And those are the best kind of trades when you get people trapped on the wrong side. That's why I'm always telling you, don't counter trend trade. Stay with a trend until you had a break of that trend line and then a retest with a new low. And usually it's a couple of legs down to a new low, just like we had here. And this is real choppy, but if you get in there and look around, you'll find probably 2 legs in there. I believe this looks like 2 legs, then a 2-legged correction, and another 2 legs, but it's real choppy. And that's the way it'll be. A lot of times you'll get the first move down will be real smooth, and the second one's real choppy. And sometimes the first move down will be real choppy, and then the second one's a real smooth one. So that's not uncommon at all. And after you watch the price action for a while, you'll start to notice things like that. But again, here's your key entry points along this EMA. And this is why I'm so big on just following the 21 EMA, because even if you take this trend line off there and you don't see that, there's the EMA, and look what happened. Every time we got around it, there was a reversal. And if you just trade that EMA, you're probably going to do pretty well until you got down here. And once you got down in here, this was your clue. When you start getting all this overlap like this, without a break higher, without a failed break. Now see, this set up pretty good. Look at this. You had this break above this area, and you got to wait on your bearish bar before you go short. And look, if you'd had your order right below that bearish bar, it never got triggered, and prices went higher. And that's why I'm always telling you, not only do you want to get on with a trend, it's best to wait on a trend bar that's within your direction. Like instead of going short here, wait and go short below that bar to be sure what's going on. But the difference here is we had a trap first. Prices broke higher, then reversal. Then it was okay to go short right below those 2 dojis because we had this trap up here. And I saw that happen a couple of times today. Where else? Oh, that happened right here. He had a lot of overlap right here, but it's really just a 2-legged move. Here's leg 1, pull back, leg 2. But what notice all this kind of resistance here. This is a breakout pullback short too. So even if you didn't have your trend line, which you wouldn't have had it yet because these two swings weren't created yet, but this was just a nice, see this support area that broke through. We tested it once here, and then this was the second test, and it held both times. So that's a double top and a double test. And anytime you test something twice and it fails, it's probably going to go the other way. So when prices broke up here, I guarantee you a lot of people thought this was a failed breakout. They got along, but all they did was get trapped in that little stem right there. And so you could go short below this bar because you got this trap here. And if you'd have went short right there, it was off to the races down here. And I believe, yeah, your runner definitely survived here because I traded this and exited down here when this bounced right here. And that was where I got most of my money today, right there. And these were two really good moves. And if you caught both these moves and got the majority of it, you could have your 2 to 5 or 6 points off a single contract and be done for the day. And if you're trading multiple contracts, then you're getting 4 to 10 to 12 points just off this move right here. But let's put our trend line back, and then you can see, so regardless of whether you had your trend line, which you wouldn't have had it yet, this was a nice setup, easy to see. Again, there was nothing wrong with this trade. I don't really like it. That was an inside bar. We didn't get back to the EMA. We didn't get back to the trend line. But all the same, it was still a good trade. If you saw it and took it, it was a great trade. It was a riskier one, but all the same, sometimes you get rewarded for taking risk. But I didn't take this trade right here. I was already entered, and I stayed with this one and wrote it on down. But this right here is a second entry short. Here's your first leg, pull back. Second leg. Now you could have looked at this like this is leg 1, there's your pullback, and there's leg 2. But by the time this triggered, notice where it triggered. You had 1, 2, 3, 4, 5. You had 5 overlapping bars, and I could see you getting trapped here. This could have fooled anybody, but because of all these overlapping bars, even though this was a fairly bearish bar, that was not the best setup. So, but once you got up here back to where the trend line was, and you had 2 nice measured legs, which you can see leg 1 right here, pull back leg 2. On a bigger picture, that's a second entry short, and this one hesitated a minute, which doesn't surprise me. But then it was off to the races down, and if you had your stop above any bar, even if you tighten your stop above the here's your signal bar, here's the entry bar, or this one could have been your signal bar and this was your entry bar. Either way, as long as you kept your stop above the previous bar, above the high here, you were safe. And same thing right here. Even if you entered below this bar, even if prices had backed up and went higher again, you should have been okay. And well, if you had it 1 tick, you wouldn't have been okay there. But generally, make sure you at least keep your stop. I mean, I had somebody contact me the other day, said they were getting stopped out on every trade and couldn't get anything to work, but they also told me they were using a 3-tick stop. And you're going to get stopped out on just the noise alone with a 3-tick stop. You're just not going to survive. And because even if you got the direction right, look inside these bars. How many of these bars are 4 to 5 to 6 ticks? And so just the noise inside that bar, prices bouncing around, will probably stop you out. You got to at least get above your signal bar, and or below your signal bar if it's down here, so to speak. And generally you need to be above the last swing. And usually what I'll do is I just put my 2-point stop in there, and I put my target in there, and I go with whatever happens. I either get stopped, I'm either going to be right, and I'm going to get stopped, I'm going to hit my target, or I'm going to be wrong, and I'm going to get stopped out. So most of the time I hit my target. So anyway, here's your key entry points. Hopefully you saw these. Again, here, regardless of where you had this trend line, even if you didn't have this trend line, you had a double top at the EMA with a nice reversal bar right here to go short below. and it hesitated a little bit, but it still moved on down here. Anytime you get a double top or a double bottom, especially if the double top or the double bottom is with trend, it's almost always good for at least a scalp, and that was the case right here. This is a double top with the trend because the trend is down, and so that's going to usually be good for a scalp. And you need to make sure there's enough room in there, usually to scalp out. Let's see if this one was here or not. You would have entered at 0375. That one would have been pushing it a little bit, but because it was a double top with a trend at the EMA and prices couldn't get above it, that's just about a no-brainer, and you just about have to take it. And sometimes they'll fail and sometimes they won't, but you actually could have gone short below that doji right there on this one because it is a double top at the EMA without prices being able to get above it in a downtrend. So everything was leading to this prices going lower here. When they broke lower and instantly failed, that was a strong sign to be careful. And there was really no reason to enter long here. This was a breakout pullback long, but you see it didn't go very far before it pulled back again. And there was really no good setup here either, because this is a doji. It's bearish looking. This is a doji. And this bar did open on its low and close on its high, but you're going long right here at this high across this area. It's been resistance. It's just not a good entry, and you can see it didn't go very far before it reversed and sold off. And what it probably did was it stopped. All these people that got long up here instantly got stopped out, only to see it reverse and go exactly where they thought it was going to go, which was higher than that point right there. And that's the way the ES operates. So you got to learn to watch that stuff. And so this was a good entry here, another double bottom. We had a little trend line here. It wasn't a very long trend line, but we had enough reason to be thinking long now. And when we broke here and had this little trap right here with a double bottom, that was okay to go long. And even if you didn't go long right here, you got this huge bullish bar right here. There's still plenty of room before this top, so you could have gone long right there. And you see it hesitated a little bit there, but there was, it never broke below a previous bar. And at the very least, you got to keep your stop below this was your signal bar. Either this or this was your signal bar. So your stop had to go down here at least. And you can see that stop never even got considered. And even if you would have use this as your signal bar and you tighten your stop below your entry bar, which is here, you still never got stopped out. So you got to be smart with your stops. You don't want to give it too much room so you lose more money than you should. But at the same time, you got to give the trade enough room to work. And I'm getting a lot of emails about people trying to keep their stops too tight. So. And it's not just one of you. There's several of you. I got a couple of emails today, and every one of you don't think I'm talking about you. But there's more than there's that's a common mistake. So usually the people have the other mistake is that they give trades too much room. But we also get just the opposite problem where people don't give the trade enough room. And either way, you got to find that happy medium. And the one rule I have is that you got to at least keep your stop below the previous bar. And usually what will happen, it'll tick one tick lower just like that and stop people out, the people that use the tight stops, and then it takes off and goes higher. So I usually even give it a tick or so more than that, but generally I don't give it more than 2 points. That's kind of my rule, is not more than 2 points. And every now and then I'll give it more than 2 points, and most of the time it'll work. But every now and then I'll get burned and I'll lose 3 or 4 or 5 points thinking I'm smarter than the market. So it happens to everybody. And so if it happens to you, don't be too concerned about it. Just try to remember the rules. And if you make the mistake, don't make it twice. Because we're all going to make it. I mean, the hard part, trading is not the hard part. What I'm teaching you here works, and it works extremely well. But the problem people are going to have is once even they learn to read this price action, you're going to struggle with your inner self, the psychological part of trading that everybody talks about. That's what makes trading hard, because you're sitting here, you watch these good trades, you miss them, And then suddenly down here you said, I watched this thing go and go and go and I can't get on, so I'm not messing around anymore. I'm gonna get on. And guess what? You get on right at the bottom or right at the top, and it goes the other way. So don't get antsy. Don't let the fact that you're missing trades or that the market's going without you concern you, because there's going to be more trades all day long. And if you miss this one right here, there's going to be another that comes along right here a little bit later. You just got to be patient, and you got to wait on it. So be patient and remind yourself not to be antsy. Remind yourself no losing trade, even if you're not trading, means you're not giving the market money. And obviously you can't make money if you're not in the market either, though. So those things will weigh against you, and they'll fight against you, and they'll hurt your trading. So be careful with them. But anyway, this thing's 20 minutes. I'm stopping this. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.